Everyone. Welcome to our first episode of Lodestar Lending Leaders in 2022. Welcome back. I first off would like to thank Lena Gardner, Director of Sales and Marketing at Lodestar, who handled a lot of the episodes towards the end of last year. You will be hearing a lot of her in this year to come, so don't worry, you're not stuck with me too long. We have a great guest, a great podcast today. I'm really excited about to kick off the year. A good friend of mine, Cieloha at Quilia. He's their manager of lender sales. I've known him for a while. We've been in MBA panels together, been around the industry, had our share of beers together at conferences. So excited to have a conversation about kind of the things you see in lender sales. Ty, thanks so much for coming on today.
Yeah, thanks for having me, Jim, and it's great to see you again.
Absolutely. Yeah, I know. This is, I was saying before, I think usually every time I see like the trees of Oregon behind you, but I know it'd be a little too cold to do that today. So at least you have the palm tree behind you over there for a little bit of greenery.
There we go.
Yeah. So wanted to kick this off. I know a lot of folks, Quilia has grown by leaps and bounds, obviously, over the years. I remember when it was Nate and a few guys wearing hoodies and sweatshirts. And sweatshirts at conferences and people saying, who the heck are these guys? I don't think they really have that problem anymore. But I think one thing that we've talked about is, you've shifted from, Quilia as a title agent platform to start, and now there's a lot of other things they do for lenders. So love to hear about kind of what's gotten you into this space in general, the types of things that you do with lenders, and then we'll kind of talk about, things you're seeing in the industry.
Yeah, appreciate that, Jim. And I think most folks that know Quilia in the space know us as a system of record for title companies. So is the LOS of title. We've got most of the lenders in the country today have probably done a closing with some capacity with a title escrow agent or an attorney on Quilia. But over the past several years, we've been taking the product to the lender market as well and trying to fill in all those gaps between how the lenders are working with their title partners. There's still a substantial amount of manual work and effort that goes into the closing today. And so our goal really is to, again, simplify that process. And we started in post-closing a couple of years ago, and we've been working our way upstream to really address a lot of those major pain points.
That's great. And what do you see as kind of the main problems when a lender comes to you and says, Ty, please help? What are the things that you feel you can kind of make the most impact on?
Yeah, it's been interesting if you look at just the evolution, I think, of where lenders have put a lot of their buying power and tools over the last X number of years. So when you and I first met, it was point of sale. It's been e-closing the past couple of years, and as that continues to revamp, I think upstream is really where you're going to see like the next iteration of focus go from an operational perspective. I think when we, at Quilia talk to lenders, a lot of it is just the interaction and the back and forth between the lender and the title company. So if you look at, just for example, in any given closing, the lender obviously has a lot of control over which title partners they're working with on a refinance. So they get to typically choose friends that they've worked with or buddies where they have a very streamlined process. And on purchases, obviously they don't. So as we move into a purchase market, this next year, rates are going up, margins are getting compressed. There seems to be a lot of real focus on areas where lenders can optimize their workflow, reduce costs, a lot of those standard KPIs that we always talk about as sales folks. But there really seems to be a huge opportunity to add value in that lender title relationship because it is such a manual process right now today.
What do you think leads to that? I remember I called on title agents when I started Lodestar. I was selling to them for a while, and I called a title agent once, told them about our product, and they said, "Oh, our owner doesn't really like the internet." Right. So, where are we at with title agents, a manual process, people flat faxing things? When I was little, running around a family title agency, they had typewriters for typing out policy. So, where are we now?
It's a great point right there. And I dealt with the same thing on the lender side when I got in the industry. And so I think, at the end of the day, there's so many solutions and products in place, especially when you look at like e-closing platforms, you look at point of sale solutions, you look at the end of the day, people are just trying to get stuff done. We saw the CFPB try to fix this with TRID back in 2015. We saw a lot of big, settlement agent collaboration tools that rolled out, and then everybody went back to what they knew before, and that's back to pen and paper and email and phone calls. So when you look at just the number of emails, the number of documents that are going back and forth, especially unsecurely, I think a lot of lenders, and especially on the title side as well.
Yeah.
Like both sides don't realize that they're sending documents with very sensitive information back and forth. So that opens them up to breach, and just the level of effort it takes too in terms of throughput and like labor costs that that both sides are sending data and documents back and forth right there. So how do you take a process where it's pretty standardized throughout, the initial order placement all the way through post closing? And yes, you're going to have a lot of different one-offs and situations that need to be addressed, but at the end of the day, you're typically placing your order, you're generating your CD, you're sending out your LE, you're doing your closing, you're sending your trailing documents at a very systemized process throughout the entire workflow. So how do you automate a lot of that so you can give your folks back time to focus on higher priority tasks? You can eliminate the risk factor right there and sending over documents and data unsecurely, and then you can ultimately increase your KPIs, right? So how do you get from 25 days to close down to 20 days to close, outside of dealing with some of the appraisal issues and stuff like that we see in the market? Like, what are the actual business metrics and units that we can start to address and have conversations so that they can continue to drive it from an operational workflow, but also ultimately it's going to have a better borrower experience, which is really what the lenders are focused on is, how do we create a great borrower experience, but all these things have to line up in order for that to happen.
I mean, I'm going to push you on that. Is that what lenders are focused on? A great borrower experience, or just faster closings, lower costs? If this is easier for the borrower, great.
I think it depends on who you talk to, right? And you look at the personas of lenders, right? If the sales folks, the chief lending officers, they're focused on the best borrower experience possible, right? And everyone, you could say POS is not commoditized, but everybody's got a point of sale in place today. Yeah. Folks are working on e-closing. They're trying to figure out how do you drive that seamless borrower experience from application all the way to closing. So I would say that's, definitely a big area of focus for those, again, chief lending officer, those sales focused folks. When you look at the operational folks, it's going to be more focused on, workflow, back-end operations, throughput, and, whatever their number of days to close are, their resource allocation and capacity right there. So I would say that is a definite area of focus. And again, we're seeing it as a higher priority focus now moving into 2022, just like I mentioned, as rates are going up, we're seeing margins compressed and a lot of those standard where we had a bigger buffer in profitability over the last couple of years. Now that that's shrinking, there's a big focus on a lot of those areas right there.
Like we had Kevin Peranio from PRMG on in our first season, and I think the number was about 14% of customers return to a lender. So something just absurdly low. And I think when you talk about borrower experience, lenders are starting to realize that's actually, this is future business at the end of the day, right? If someone likes working with us enough, it's a referral, it's another loan. I know it's a long timeline. People don't really refi once a year. It's a little more spread out, but I think, folks are looking at, that good experience is actually good for business too, at the end of the day.
Yeah, 100%. And we saw data around this, when I was selling POS several years ago, that even the millennial and Gen Z borrowers, they want the ease of use of technology. So they want that flashy, sexy, TurboTax like borrower experience, but they still need the hand holding and they need the relationship coaching right there. And so I think that's where, just like, KP had mentioned, you have to find the balance in using technology to make things easier, but still maintain that relationship. Because if you don't, just like you said, then you have a 14% return rate and they're going to go to anybody else for the refinance or the next purchase right there.
Well, if you use technology right, you can leverage that. Your loan officers spend more time talking to someone and not pressing buttons.
Absolutely, right. And I think that leads into another caveat as well, is it's really easy for a lender or a title company for that matter to implement new technology and spend a lot of money, but how they implement it, how it interacts with all their different systems is another piece right there. And I think that it's the implementation and the adoption process that's almost more important than the actual purchasing process, because if they're not using it and they're not using it correctly, it's not speaking to all the different systems, then that's ultimately going to reflect on that borrower experience right there and potentially operational ramifications as well.
So when you're having those conversations with a potential lender, and we go through this too, of what makes you think the process with a lender is going to be more successful versus one that gets you a little bit nervous and has kind of some red flags in the back of your head?
Yeah, when you look at just generalized pain points, right? And we spent a lot of time this last year speaking to lenders about where they spend a lot of time and where they spend where they see a lot of pain, right? We started out internally working with lenders in post-closing, as post-closing was a huge issue, right? Dealing with
Mhm.
trailing documents, getting those back from title companies, and then ultimately getting them out to their investors. As you go upstream, it really opened the door that, okay, the lender title relationship is still really manual across the process, right? So sometimes we hear, okay, on any given loan, how many emails are going back and forth between the lender and the title company to complete a closing? And sometimes that's 75 or 100,
Yeah.
which is a lot of, one, it's a lot of emails, it's a lot of data and documents, and two, then if you look at your processors, your closers, or the folks that are dealing with title companies, that limits their capacity too. They can only now handle so many loans per body count, and then ultimately the lender
75
has
emails times 100 loans, 1,000 loans a month. That's a lot of emails.
yeah, there you go, right? So how do you cut that down even 50% or 25%? Standardize a lot of that, so that way at the end of the day, now from a throughput perspective, your processor can now handle 10 or 20% more loans per body count. And then it goes back to, or your post closer or your funder or your closer. And at the end of the day, it's a scalability issue. So we saw this with COVID, obviously, rates dropped, volumes went crazy. Everybody just went on a hiring spree. And now looking at, the next year, the next couple of years, how do you, again, use technology to handle the influx of volume, whether it's seasonal or rate-based, in order to, provide scalable solutions for that lender across the board?
One other thing that I've noticed when, you talk about the fragmentation of the industry and dealing with kind of the issues of the 70 emails per loans that you were talking about and problems like that, is kind of like a one-to-many problem, right? A lender has to work with a bunch of different title agents that they don't have control of. They're on all these different systems. You have to get them to use your system. And then a title agent is dealing with all these different lenders. As a title agent, I was a title agent for a while. You can't dictate jack at the end of the day for what your lenders are going to use. So how do you guys kind of encounter that type of problem of the fatigue of lenders wanting to, or title agents signing up for systems, and then lenders just trying to standardize things?
Yeah, I love to use the fatigue because that's one of the terms we use internally. We call it portal fatigue, right? And if you think about the number of portals that everybody's trying to get on both sides to log into, the settlement agents and escrow officers are getting hammered by 50 or 100 different portals, and then same thing potentially with the lenders right there as well. So I would say at the end of the day, it's all about like connectivity, and I think one of the advantages we have, at least with Qualia, is that being a system of record for title companies, having integrations with LOSs, is we can allow the lender to stay in their core system of record, which is their LOS, and then allow the title companies to stay in Qualia or Reservoir as their core system of record right there. So I think that helps out a lot for the folks that are on the settlement agent side, for example, that are not on Qualia Reservoir today. I would say we got ahead of that a little bit a couple of years ago when we launched our post-closing portal. And so most of the industry today on the title side is already using our portal in some capacity, right? Whether they're on the core system or they're on the portal. Going back to lenders, I think right there, that's a major challenge I think that everybody's dealing with. And I don't know what the answer is, to be honest, because if you're looking at all these e-closing platforms, they all have portals. If you're looking at all the point of sale portals, they all have portals. And again, going back to this idea of portal fatigue. So I'm hoping that, bidirectional integrations, API integrations will help start to solve this. As we're seeing the LOSs open up and expose their APIs. Same thing with some of the title and settlement software. I think that's going to be the way to go, I'm hoping, because at the end of the day, then that's just another if not, it's another portal folks have to log into. And we saw this with TRID. If it's not easy, they're going to go back to what they know, and they're going to go back to the calls, the phone calls, the emails, the faxes. And it's just more of, let's get it done as quickly as possible with the big labor push, instead of let's implement technology in a successful and scalable way.
Yeah, I like the term portal fatigue. I remember right before TRID launched one of those conferences, there was 23 portals at a conference. I called it the Battle of the Portals, and very few of them are actually in business now in whatever capacity. So it's been definitely a challenge. And I don't know if you find yourself avoiding the word portal when you're talking about the solution at all to folks.
It depends like who and who we're talking to, but I think it's going to be a challenge. So it's kind of like, let's have the conversation and figure out how to deal with this. And the other thing that's interesting too, right, is you're seeing settlement agents and title companies that are adopting their own e-closing software or their own RON software. And then you see the same thing on the lender side. So I think it's going to be very interesting moving forward it was much easier over the past couple of years because everything was mostly refis, right? And so now that we're moving to a purchase environment, does the settlement agent have the power or the wherewithal to say you're going to use our software?
Right.
The lender's going to say use our software, or are they able to come to an agreement to say, okay, let's figure out what's going to work best for the borrower to create the best borrower experience, and let's figure out how we can use both of our technologies to create a great experience across the board.
And you've basically talked about three parties in a transaction: the borrower, the lender, the title agent. But there's a lot more at the end of the day. Do we need an attorney, an appraiser, an inspector, a realtor?
Yep.
How are you? Is that a challenge that you're looking to tackle in any way, shape, or form?
Yeah, and that's a great question. And I would say our core platform, our core title platform, we've got a solution called Connect, which essentially bridges the gap between the lenders and the settlement agent. But that also opens the doors up to allow folks to bring in a realtor or an appraiser, attorney, any third party right there. So that's something we've had in place today, or we've had in place for several years now. It's something that's being driven from the settlement agent back to the lender right there, to help. Again, I think communication is going to be the biggest challenge across the board, from upfront with a realtor all the way down to the settlement agent right there. So providing a way where they can communicate, and communicate in a secure environment, I think, as well, right?
Yeah. And I think you touched on this a little bit with lenders just wanting to say, let's just keep on doing this the old way. We're busy. That's going to be quicker, right? Like, it seems like there's never a good time to implement technology at the end of the day, right? Because either you're too busy to do it, or you're in a cost-cutting mode and you're concerned about the investment. As someone who's sold technology to lenders for a while, when is that best time? And do you ever feel like you hit that sweet spot?
Yeah, that's a great question. I would say, honestly, like the beginning of the year through about March is going to be one of your big sweet spots, I think, just because volumes haven't ramped up on the lender side, at least for lenders yet. It's going to obviously slow down, a little bit as you get towards the end of the year. But I think at the end of the day, there's no best time to buy and implement software, because something's always going to happen, right? You're always going to have, the industry is constantly changing. New regulatory requirements are getting in place. So the lenders that are looking at this as a consistent, oscillating wheel, where it's like, we're going to address these areas and we're going to continue to improve them, address them, and invest in technology. Those are the ones I think in the long term, they're going to be the most successful, trying to balance all those instead of trying to cram it into a 3-month or a 2-month period, then getting all those solutions implemented, if they're implemented correctly, getting them rolled out and adopted. And so trying to bite it off in small chunks right there.
Or they come to you when something breaks, right? That's the sweet spot, right? This is broken, or we're doing a new LOS or something like that. So we need it yesterday.
Always, right? And then, some of these solutions too that I've seen, out there that are being implemented, some of them take 6 months or 3 months or a year to implement, depending on what you're dealing with. And so, trying to do that, and also trying to balance improving process or adopting other technologies in addition to that. And then again, do you have the resources to actually handle all this as well?
Yeah. So always some challenges, but hey, it keeps things interesting, right?
Right.
Changing subjects a little bit, you and I met through the Impact committee that the MBA puts together, Young Mortgage Professionals, and we're both millennials in the mortgage industry, and we'll probably still be on the younger side of the folks here until either of us turn 50 in a number of years. Right. So, a few things with, being young and in the industry, I think one thing I always like to ask is, what do you feel like the industry gets wrong about millennials?
Oh man, I think people would question.
This wasn't on our preparation.
No, that's a great question, because usually it's what do millennials need to do to help get into the workplace? But the stereotypes, I think, or what do people get wrong? I think there's obviously the assumption that millennials are really entitled and they don't have a lot of work ethic, and I think that is absolutely wrong. I think they very much are willing to adopt change too, where it's instead of, if it's not broke, don't fix it. It's how do we do this more efficient? How to do this faster? And so I think that also helps challenge the status quo of, let's look at and address new types of technology or processes to help make it better for anyone. And I think they're a lot more, not more willing, but they're definitely very willing to help push the envelope in that capacity, because, we did grow up in an age where, iPhones weren't around when I was in high school, but we're in this like nice sweet spot of where we grew up, where everything was done in paper when we were younger, and then as we progressed into college and our careers, we see this influx of technology and the impact it's just had across the board in our daily lives, and able to harness that and then apply that to the the business world for us.
Mm-hmm. Right, and I think part of it too is just the experiences we have growing up during the Great Recession too, and the idea that a company loyalty that someone would have 20, 30 years ago doesn't exist now, because it's not a two-way street anymore, right? It's not something where you're going to see a company want to keep someone around for that long, depending on how things go. We've seen a lot of layoffs even in the mortgage industry lately. So I feel that kind of entitlement or wanting to work-life balance or things like that comes from the fact that it's not the environment it was 20, 30 years ago.
Yeah, 100%.
And then one thing I find frustrating at times in the industry is, there's certainly complaints about millennials, just like we complain about the older generation, I'm sure, but everyone wants to sell to millennials, right? Everyone wants to get out there and talk to those people of those generations, because that's who's going to buy houses going forward. So what do you think people are getting wrong specifically with how you should try to market to the millennial customer?
Yeah, I would stop from a personal perspective. I'd stop sending out mail, like physical mail, to millennials. Right at the end of the day, I get it all the time from lenders, and to be honest, like I've got a wood stove and I use it as fire starter, so it's great. But I don't read any of it. But I think at the end of the day, like it goes back to what I mentioned earlier. There's millennials want the ease of use of technology, but they still need the hand holding throughout the process, right? So they want to feel like they are heard. They want to feel like you've got their back, because it is obviously a very stressful process, especially if you look at like first-time home buyers, right? The average age, I think, is about 33, and the biggest influx of first-time home buyers since the baby boomers are about to hit the market right now. So you have a massive opportunity of supply or I guess demand for folks wanting to go and purchase a home. So how do you get to them, right? I think it's a lot of relationships too at the end of the day. I think you're still going to see a lot of the direct consumer lenders, be successful with a lot of the online marketing. But I also think there was this idea when point of sale, started to come into the market that, traditional retail shops were going to be put out of business, I think, at the end of the day. And I don't think that's true, because you're still going to have those relationships, that hand holding. Most of the folks that I know that have selected their loan officer, they either get a referral from the real estate agent, or they have a buddy or a friend or a family member that recommended, for them to work with somebody right there, because they're only going to go through this a couple of times in their life, and they're still going to be stressed out and go through everything else, just like a baby boomer or Gen X would as well.
Well, I think you're going to see the split, right? The really local folks are going to survive because of that depth in the local market, and the big kind of consumer direct shops are going to do well too, because they can be first to the consumer digitally. So if you're in between, where does that leave you?
Yeah, that's a great point. And just purely from a marketing perspective, it's like, where do you invest your resources, and how do you do that? I think you made a really good point, right? It's going to be depending on localization at the end of the day, right? If you're in more of a smaller town, rural area, it's going to be more relationship driven. If you're in an urban environment, city, obviously you're going to pour a lot more money into a lot of your direct to consumer type tools.
Exactly. And I think it just looks a lot smaller. And you touched on something that I always say when I get asked that question is, the technology is important, and the home buying process will probably start online in one way, shape, or form. But you then need look for that hand holding and that relationship outside of that too. I read an article a while ago, actually, the way to get to millennials is through their parents, right? In terms of, hey, Dad, do you have a mortgage guy, right? Or something like that. Like that could be. So I think the fact that everything is done on the phones is a common misconception.
100%.
And I think, with kind of young professionals in the industry, Quilia being a young company, what have you seen over your time in the industry now that we're probably not the youngest people there anymore?
It's a lot of fun. I think with the influx of fintechs and a lot of these, especially just VC-backed companies that have come in the industry and really challenged the status quo. Whereas when you and I came in the industry, we were always the youngest by probably 20 or 30 years, easy. And if I was in a meeting, with a bunch of folks, traditionally I was expected to just keep my mouth shut and listen and have somebody else that was more senior, drive everything. Whereas now, you do have CEOs and executives that are still in their 20s right now, running companies. You've got successful account executives that are, in their mid to late 20s in this industry that have a lot of subject matter expertise or are building it. So that's been really exciting to see, is that, somebody doesn't have to wait until they're later on in their career to come in and have an impact. You can come in, and as long as you're able to learn the industry and speak the language of lenders or speak the language of settlement agents right there, you're able to help add value and really push the envelope, I think. So that's really exciting for me, and seeing that with folks on my team that are, getting into their careers and growing their skill sets, their sales skill sets, is going on and being able to have conversations with mortgage executives and actually add value too, not just have the conversation to have the conversation.
I was talking to someone who's the CEO of another vendor, and he was talking about kind of, a lot of the newer companies, venture back, that has generally a lot of younger people. And he was saying, like, yeah, but I'm talking to someone who's never even bought a house and like doesn't know the industry at all. Right. And then I said to him, I've never made a mortgage payment, right? I'm 35. I haven't bought a house. And his jaw just dropped. He just kind of got flabbergasted for the second. So, I do think that there's a difference of, you can understand this industry and be able to learn it if you're in the right situation around the right people, even without making a mortgage payment.
100%. I still think there's a massive lack of just supply of people that do know the industry, right? Everybody in the industry is trying to grow and hire, and there's just not enough supply of subject matter expertise in the industry. So I think that is a big challenge. And you're seeing that especially with the fintechs, and just folks that I'm talking to, is they've got a lot of very smart and very talented people, but there's very limited knowledge about mortgage or about title or about that space. And so trying to figure out how do they fill the gap, moving forward. And I think there's opportunities to do so, but it's been a challenge I've seen, since the last 4 or 5 years, since you did see this big influx of tech.
That's something we're looking at now with hires too. Of, do you go in the industry or outside of the industry? And, you pay a premium when you're looking at folks in the industry versus not, but it takes a lot more time if they're outside. So there's, like anything else, always a lot of trade-offs.
100%.
Yeah. So, wrapping up, looking ahead to this year, what are the things that are going to be taking up a lot of your time, both new products, lender discussions, things you're excited about?
Yeah, great question. And we've got some new products that are going to be launching early next year, so I'm really excited about that. Can't quite talk about it yet, but I think it goes back to really solving those lender title relationships, and that's, I think, going to be the next iteration of, as we get further and further, lenders are getting further and further of investing in adoption and e-closing solutions. I think this is going to be the next iteration of where lenders really address. So I'm really excited about that. And then we also have our own internal conference coming up. We call it the Future of Real Estate, or FORS. So that'll be April 4th through 6th at Austin City Limits in Austin. And that's been a really, really successful conference in the past for us. It brings together lenders, title companies, settlement agents, escrow officers, and it's a really great event across the board right there.
Nice. Yeah. Sounds like a great place for it too.
Absolutely. Can't go wrong in Austin.
Warm weather in April.
Yep. Good weather, good music, and a lot to do there as well.
Yeah. Awesome. Well, anything else you want to plug? Or this is actually usually where I ask someone what gets them out of bed in the morning, excited to do what they do every day. That's a really good question. For me, it's my team. I want to put my team, my account executives that report to me, in the best position they can to succeed, whether that's in their careers, whether that's in this industry, or whatever it is they want to do. So I'm here for them. I like the industry as well. When I came in this industry, I had a pretty sour taste, to be honest, in my mouth. I got out of college in 2007, so had my first job, was able to keep it through the recession, but I had a very, I would say, negative perspective on the mortgage industry. And when I got into it, I assumed that I'd be in it for a year or two, and then I would be doing other things. And here I am, like 8 or 9 years later, whatever it is, still here. And it's been really cool to see. Even though it's a lot slower than other industries, I think at times, to move and progress, the progression of the industry, how big of an impact we have on people. So that's one of the I don't know, my favorite part is the stories we hear from both lenders and title companies, is like the impact on actually closing a home, right? Somebody that's able to buy their first home, or immigrated from another country, never thought they could own property or own a home. And like, they get that. Those are the stories that I think really help drive me and keep me in this industry. And then,
as tough as it's been, like you're starting to see an influx of like diversity in the industry, which I'm really excited about.
Mhm.
So I think both from an age perspective, we're seeing a lot more millennials and Gen Z, and then just different people from different backgrounds, different races, different religions. Like that's really exciting for me too, because that's not historically been the case in this industry. And it's easy to speak as a white male, I guess, obviously, but that diversity is really cool to see in this industry now, and it's like continuing to get better, which is great.
Nice to see the industry match the people who are buying homes at the end of the day, right?
That's a great way to put it.
A good thing, and also just a great thing for business too.
Hunter, yeah, that's a great way to put it right there.
Yeah. Well, you had said a slow change, but knowing you for the last few years, the progression has not seemed slow at all from my end. So, keep on doing what you're doing. I'm glad we got to kick off 2022 together, and hope to see you out there as we finally get back to some conferences.
Yeah, looking forward to it, Jim, and look forward to grabbing a beer when we see you next.
Awesome. Thanks a lot, Ty. I appreciate it.
Thanks, Jim.